Paul, are you there? Paul,
I'm here, baby.
I hear you.
Why is it?
Hi, guys. How are you? Are you there? Hi, guys. We are here. We are live. I will preface this, guys. Paul is in Mexico. We will most likely have a couple delays with the Wi-Fi, but in essence, he will be joining us as he is right now. Paul, how are you? Look at that beautiful, spacious room behind you. How are you, my friend?
I am wonderful, and I have Tim right here with me as well.
There's Tim, CEO. Love you guys. Thanks for joining me today. I welcome everyone in from all across. Seth, can you turn up your mic volume? Yes, guys, of course. Let's give this a try. How's this, guys?
There's next door.
Here we go. Hi, guys. Yeah, let us know. Obviously, listen, guys, we certainly know that some other shows, including the biggest ones in the world, go on vacation. And so we just try to keep our show going while we're on vacation. We always want to bring you that content. So yes, Paul is on a spaceship, and yeah.
Should we bring somebody in to say hi?
So Mo will not be joining us today. We have a special Mo and I live stream tomorrow. But Paul, who do you have on your end? Bring
that person out.
This is like the Johnny Carson show where people are just going to come through the. Paul, did you ever watch Johnny Carson as a kid? Anyway, we welcome
no.
you. We welcome you guys in.
Hi to all your fans.
I am unfortunately in Ohio, but I got my Mexico shirt on, and Paul is in Mexico, of course, in his beautiful mansion. Paul,
Paula, are you gonna come say hi to your fans?
That's right. The Paula fans are in the chat. Yes, Ron is right. Look at that view, guys. It is incredible. And up there she is. Oh, Lord, help us. Look at this woman. Hi, Paula.
There she is. She's back, guys.
Okay. Guys, we welcome you in. All of our wonderful patrons, you know I see you there, and I love you, I yub you, I love you. Coming on the show, of course. We will be live Tuesday and Thursday, of course, right now, and on Thursday at 1 p.m. And Mo and I, listen, if you're looking forward to what Mo has to say this week, of course he goes live twice a week, but him and I will be doing a special live stream tomorrow at 1 p.m., our usual video time on Wednesdays. Mo and I will be going live. Mo's in Mexico, of course. I'm in Ohio. So we will be answering your trading questions tomorrow at 1 p.m.
Hey,
so
Seth, you need to turn the mic up. It says it's gone back down on your mic, Seth.
Oh, Lord help me. Give me a second, guys. You guys are doing it. Paul, while I look at that, will you give us an update on that beautiful website, the Everything Money website? Paul, go ahead.
Yes. So, guys, I got a lot of questions about that. The website is going fabulous. I said to everybody April 15th, and I probably could release it today, but I'm not going to, only because we're setting up everything. I want to make sure that the very basic things are ready. I'm getting a lot of requests also for things to do to the website. Trust me when I say, guys, there are so many plans for the website. We are excited about it. Tim's come on board again. Tim's coming on board. He's running the entire Everything Money channel along with Dynasty Owner. It's going fabulously well. I'm so excited. You guys are going to see immense value in the website. I don't know how to explain it any better than the wait was worth it. And for everybody who supported us while we were building it, it's going to be well worth it, because the price of Patreon is going up at least 20% for the minimum price of Patreon. It might be the first software to ever be developed in time and history, Jonathan. And the other thing I want to say about that is I also managed expectations well. I said back in November it would take 9 to 12 months, and I'm actually early on that. And the reason being is I learned the hard way that software takes forever to do. We will be adding a lot of enhancements and a lot of great features to the website as time goes on. What they'll be, guys, the website is only scratching the surface right now. Since I started the website in November, my data cost alone has over tripled. Actually, it's over quadrupled, I think, because of how important it is to me to bring more and more data to you guys. I'm so excited about this. We have over 1,800 patrons right now who are paying us for the website as we speak. I'm telling you guys, it is a great, great, great website, and it'll only get better. I love you guys. I really appreciate it. I don't love you as much as Seth does for some reason, because Seth is like obsessed with you guys, but the software is awesome. It's incredible. It's going to go through so many changes. If you have any suggestions for the website, we will figure out a way to make suggestions on the website. I don't want to have it just be on emails. I want to create something where it's on the website. You can go in there and make a request or a bug report or something like that. But April 15th, it will happen. You guys will be able to access the website.
Paul, go ahead and take that mic a bit and just move it away from your mouth just a smidge, so you're not.
Oh, Jesus Christ, relax.
So you're not making out with it. Guys, let me know if my mic's okay. Guys, again, I realize the setup might be a smidge shoddy going over on the internet, of course, but the option is we just don't go live at all. So we're trying the best we can, and stay with us a bit. I love you guys. Yes, Paul, I would say in general, last week what I found out was I am absolutely necessary to this show. I mean, the wonderful comments we got in from all of you fans out there when I was on vacation last week was very fun. So I'm falling apart over here.
Hey, Seth, I keep getting people keep writing that you're much lower than me on the volume.
Sorry, guys. Let me keep working it a bit. My apologies. I love you guys. You know it. Guys, how about now, guys? My apologies. Let's try that. Seth's in a paper bag. Sorry, Paul, on my end, it's feeling good. Yeah, let's try now. I hope you guys can hear me now. How's it going, guys? Seth's in a paper bag.
Seems like it's good.
Okay, thanks,
All
guys.
too loud.
Thanks,
F you, Mason.
Anyway, guys, let's get to it. I appreciate the help with the audio, guys. Of course, you guys are incredible. Yeah, Paul, you are passionate about that website. I know, like, April 15th is like our D-Day, right? No, that's a bad term. It's like our release day. I watched Saving Private Ryan last night, Paul. So, yeah, but yeah. So, guys, let's get after it. I'll try and speak.
Well, can I announce a winner here, Seth?
Winner of what, Paul? Oh, go ahead, Paul.
The bracket challenge. Let's do this. Let me show everybody, guys.
Yeah, go ahead, Paul. Go ahead.
So first off, you're esteemed leader here, Paul. Out of 384 entries, how many entries? 387. I got 253, so I pretty much stunk. I got 50 points. But congratulations to these top 4. Christopher, I'm really sorry you were number 5. So close, but so far away. Congratulations to Max, Brian, Kobe, who's a Paul Super Short, and Thirsty. Congratulations on picking Baylor, guys. I was not expecting Baylor to pull that off last night. I thought it was definitely going to be Gonzaga. So yeah, it's pretty awesome. And look at Jorge. Jorge did so well that Gonzaga lost, and he still got 12th place. That's pretty awesome.
So, Paul, tell me this: you're sending out money to the winners? Is that correct?
I am. I'm sending out money to the winners. $2,000 for first place. So Max will get 2,000, Brian will get 1,000, Kobe's getting 500, Thirsty is getting 250.
Awesome, guys. Yeah. So, yeah, I guess I'm getting some feedback here. Not feedback, but I guess people are saying that my mic is sounding okay, guys. So maybe get your speakers on your end. We'll see, guys. Good. We'll keep working with this. My apologies, Paul. Let's get after some news. Since you sound so great, I'll just stop talking. We did the FANG stocks last week, and they exploded on Friday. They did really well. I want to get your update on that sector. Obviously, the market is back up, and people are looking up in the world, Paul. Obviously, the vaccine is hitting. I'm sure you saw that Google commercial last night during the basketball game where we're planning parties and we're going out, we're doing things. It's starting to look like a new year, Paul. And I wanted to get your thoughts on this looking forward. Can we keep growing? For every video, I'm sorry, Paul, for every video I find on YouTube about how great we're doing, I keep seeing the Michael Burry status of how explosive this overvalued market can be. So tie it all in with me. Give us your thoughts, since people haven't heard from you in a few days.
You know, I'm going to go right back to valuations matter in the long run, guys. And, you know, it's nice to see stocks are up for a lot of people. And I keep getting a lot of people saying, oh my God, Paul, you were right about this stock and this stock. I can't take full credit because a rising tide raises all ships. So we have to remember that. Like, even value stocks will still do well in an overvalued market at times. The goal is that value stocks do well over long periods of time through good and bad times. So as much as I like to take credit for it, let's just remember that we haven't seen a really bad market since this show started. And if stocks were down, if our value stocks were down 50%, I wouldn't care. I'd say buy more if I really believed in the analysis and what my thesis was in each stock. So stocks are going crazy and crazy. They're getting higher and higher and higher. My short is losing me more and more money, and I'm not even phased in my opinion on it. And that's part of the discipline that I have, that I'm trying to teach everyone to have, is always base your decisions on fundamentals. In the long run, it will work. Just be patient. I do think we're going to have a really bad market at some point. When? I have no idea. Could this S&P go to 5,000? Sure. Is it possible? Absolutely. Is it probable? I don't know or think so, but I've been wrong. I didn't think 4,000 was possible on the S&P just 2 or 3 years ago. Especially not 1 year ago. I didn't think 4,000 was possible. So I'm just going to be, yeah, Jonathan, people should watch The Big Short, because The Big Short is exactly what's happening here. It's like, what's going on? Your thesis is right, but prices keep going up. Just the way it is. I mean, if you're in stocks right now, great. If you're in stocks that have good fundamentals, I think stocks will still go down for you, but I think they'll do very well relative to the market, because when stocks fall and the big hype stocks fall, people are going to look for fundamentals, cash flow, things that matter in the long run with stocks. So just be patient. If you believe the stock market is justified, I think you got to go take more of a look at history of stocks, because it is not justified. And it's no coincidence that the best value investors of all time all say the same things about valuations right now. That's just it.
Paul, I know Edgar's asking a question, and I know your answer is, could this sudden optimism be a false rise before a crash? I guess that's what everyone.
That always happens. Edgar, that always happens. It's not even. Could this be it? It is it. I mean, that's just the way it always happens. Now, how long can that optimism last? I have no idea. I've been wrong for 4 or 5 years now, and I sleep just fine at night, realizing the numbers. If I told you the numbers that I've lost out on by not being in this market, you guys would all throw up. So it's just, you just got to stick to what works over long periods of time. In my opinion, I stick to what works over long periods of time. Now, the great news about our channel is you can learn from Mo and chart reading. We're going to have momentum trading at some point. You can still make money in markets like this and down markets based on other methods of investing or trading or whatever it is. So that's the great thing about this channel. It's not just going to be focused on fundamentals. It's going to be focused on multiple ways of making money. And I just think this is definitely the calm before the storm, but how long is that calm going to be? I don't know. I just have no idea. But there's no way that this market is reasonably valued. There's just no chance.
Yeah, Paul, I am shifting my gears. I have heard enough about the Bid and Ask Nation on the Patreon, the middle tier that's following Mo. Paul, as you know, Mo goes live twice a week. He has a video coming out every day at 9 a.m., including weekends. And Paul, I'm getting jealous enough that I want to start making this trading and these charts sort of my hobby. I'm into those ridiculous Magic the Gathering cards, but I've been in my mind. I've been thinking about transferring that money into maybe having Mo and I sit down and getting on that Bid and Ask team, because they are really doing well. And I'm almost jealous to see. Paul, have you thought about that way? I'm jealous how great our traders are. We hear about Bogdan being an amazing short person. We hear about people who are very new to this making a lot of money, and I'm getting jealous, Paul. It's kind of crazy. You know me, I get jealous a lot,
Well, the interesting thing about Bogdan is he's doing well shorting in an up market. That's a very, very difficult thing to do. So I give him a lot of credit for that. If Mo speaks very highly of his ability to short, and to short in a rising market is very, very difficult. That's just very impressive.
Paul, we have some questions here. I want to remind folks a few things. Again, Mo and I will be going live tomorrow talking about trading. April 16th, Friday, April 16th will be our Patreon only fireside chat at 6 p.m. in the evening.
Wait a second, Seth. Goblin Goon 90 has a very good question.
Go ahead.
Can you pull that up?
Was the .com bubble a slow crash? It is interesting, Paul. Go ahead.
So I'm going to pull up the chart of the NASDAQ, which was the .com. Is my screen shared?
Yep, I got you.
Okay, so the .com bubble was highly NASDAQ. So let's go look at the NASDAQ composite, and let's go look at 2000. Okay, so how do I get more of these? So let's go change the date to 01/01/1998 to 12/31/2003. Let's look at this, guys. It all depends on what you view to be fast versus slow. But if you look right here, it rose. Around March of 2000, it started to fall. It crashed, started to rebound. So at this point, everybody's like, oh, it's rebounding, it's fine. So how long did the crash take? The bottom of the market took a year and 7 months, 8 months, which is 2 years. It took 2 years. It took 2 years and 7 months to fully come to the bottom of the market. That's a long time, guys. That's 31 months to go from peak to bottom. Now, was the majority of the crash fast? Almost over a year. It took over a year for it to go from 5,000 down to 1638. But then we had and that's the thing. Everybody always tells me, oh, 9/11 caused the crash. I'm like, oh, really? Because I'm looking at April 2001, which was 5 months before 9/11, and the market and the S&P, the NASDAQ had already fallen 70%. So I'm looking at this saying, okay, this is not the way it really works. But look how low it got. It fell. I think 1,083 was its absolute lowest, or 1,100 something. It fell 80% in 2.5 years. How long does it take? Every crash is different. Every single one is different. Look at last year's crash. We fell 38% in 1 month. In 1 month. That's insane, guys. So how long does it take? I don't know. It's just everything is different. But this .com crash took 2.5 years to play out fully, but within a year and change, it had lost the vast majority of its losses. And that was before 9/11. So I still love it when people tell me, well, 9/11 happened. I'm like, no, 9/11, it would still fallen 65, 70% before 9/11. So I don't want to hear it.
Paul, people are commenting on your beautiful Mexican villa, of course. I love going down there. And yeah, Paul, I love reading news articles about this topic and getting your thoughts on it. That's why we're here. Paul, I want to get into, if you see any other questions, Paul, just let me know. I do want to talk about CCL. It's all over the news. My son Gio absolutely loves this stock. He wants to increase his position long term. He's very much in love with this. I don't know why, but of course he's been scanning the Everything Money website, so he's in love. Have you got a?
Well, he's in love with it. You know why he's in love with it? Because it's gone up a lot since he bought it. And that's what typically happens when we see a stock that goes up a lot. We love it more, and we see stocks go down. We dislike them, but that's not a reason to actually go up or down.
Yeah, it's up 5 or 6% the last couple of days. Do you have any updated thoughts on CCL real quick before we get into some other ones that people want to talk about? We are taking your requests, folks. Obviously, we like to listening to our beautiful patrons with requests. But go ahead, Paul, on CCL. What are your thoughts?
I still like CCL. I don't think it's a. I lost my shares through a covered call at 30. So I think the company with their dilution of shares and things like that is somewhere now in the $40 to $50 range. So I don't think there's enough. I don't think there's enough with where CCL is. They're not back on the water yet. They're not generating free cash flow. I mean, look at their last year free cash flow was a loss of $10 billion. I would not add to the position, in my opinion, of $30. There's not enough margin of safety at $30. Do I think if it was below 20, I'd be buying more shares? Absolutely. But at 30, 28 or 30, I just feel like if you have it, keep it. But I'm personally not adding the position because I think the company is a $45, $50 share company on the high side because they're diluting by issuing more shares in order to stay afloat. No pun intended. But I'm not adding. It's not like a discount of 35% with where they are currently in the market in terms of not being on the water yet and generating cash flow is worth the squeeze.
Yeah, Paul, someone's asking, Dark Knight is asking, should we be shorting CCL? Now, Trader Mo did a video just this morning on shorting CCL. What are your thoughts?
I'm not shorting. I'm making a personal position to never short individual stocks anymore. I did it with Amazon. I did it with Facebook, Salesforce, and Amazon. Made money on Facebook and Salesforce, so it got me cocky and lost the farm on Amazon. So I'm not doing that anymore because individual stocks can go crazy. Now, if you're doing it as part of a trading or momentum strategy, yes, do it. Like I will short through my momentum strategy, but not based on valuations. I will do it based on momentum and chart reading completely, but I'm not going to do it based on fundamentals.
Paul, my other question I wanted to ask you today, and I think a lot of people will be wondering about this, is the stock, of course, we've talked about numerous times, is the Discovery Communications, DISCA. This is Discovery Channel. And this was a this is
a magic formula one.
Yep, this is a high-flying little book that beats the market stock for me. However, it's been beaten down of late, and I didn't know if you wanted to give me some updated thoughts on Discovery Channel. Look at this thing.
Do you see this chart? It peaked at 77. It's now down to 41. This is all this year, Tim. This is all in the last 4 weeks. That was March 19th. My understanding is it was a what's it called? A short squeeze or something to that effect. I mean, it just skyrocketed. It's still up for the year. I'm a big believer. If you bought this with the magic formula, you stick with it because you're still up for the year. It doesn't really matter. But if you're looking at the stock, if you like the fundamentals, and you think the value is well above 41, buy more.
Yeah, Paul, I think this stock fell off the magic formula.
Yeah, but just because it fell off the magic formula now doesn't mean if you bought in July, you get out of it, though.
Okay.
You stick with whatever you bought. If you bought a magic formula, you stick with whatever stocks you bought at that time. Doesn't matter if they fall on or off the list. You stick with them.
Paul, Amina has a very interesting question before we get on to a couple more stocks. Do you think the Fed has made this market crash proof? We've talked about this on the show, Paul, and I need someone a little more wiser than myself to explain when we keep drumming up this stimulus money. And 2 weeks ago we had a video coming out. We put out a video about stimulus versus inflation. And so what are your thoughts on something like a crash-proof market, Paul? If last year can't knock us down, what will?
There's no such thing as a crash-proof market. My brother has the same concerns with the Fed buying equities at some point to keep the markets afloat. That could very well happen. It's been done in China. It didn't work. It didn't stop. They've stopped markets from opening. Didn't stop crashes. You know, at the end of the day, I really believe in fundamentals. And if the Fed has to buy stocks and pump money into the economy, if that's all it takes to save everything from crashing, does that make any, like, that really doesn't make any sense. Like, at some point there will be inflation. And when inflation occurs, what happens to interest rates? They have to go up to curb inflation. When interest rates go up, and you can go to the, let's say interest rates went to 12%, you can go to the bank and get 8% of your money in a checking account or a 12% CD. What return do you need to get in the stock market to take that risk? The risk-free rate goes to 10, 12%, so you have to get 15, 20%. What has to happen to prices to get 15 or 20% returns in stock markets? Prices have to fall. That's how all these numbers work together. So is it logical to say, hey, can the Fed just stop sure, but what do they have to do let's take that premise, but what do they do in order to stop the economy from crashing or stocks from crashing? Because by the way, we printed an awful lot of money in the last 10 years, and the stock market still crashed 38% in 1 month last year. But if you take that position of stocks can't crash because the Fed gets involved and the government gets involved, then you print all that money. What happens when you print all that money? Inflation. What happens when there's inflation? To fight inflation, you have to increase interest rates. What happens when you increase interest rates? The risk-free rate goes higher. When your risk-free rate goes higher, what does that mean for your risk assets like stocks and real estate? You need a higher return to justify buying them. Because if I can get 7 or 8% from a bank, why would I ever invest in stocks at 9 or 10%? Ever. I never would. That's too small of a margin. I would never do that. If I can get a bank to give me 7 or 8% risk-free, I would never invest in stocks. So I need a higher return. How do you get a higher return on stocks? You pay less for them. So what happens to stock prices? They have to go down. This is how it all works together. I just don't believe that over long, long periods of time that these things can be avoided. Crashes can be avoided. Cycles are a guarantee in life. Death, taxes, cycles. These are the 3 guarantees in life.
Paul,
and by the way, Dark Knight is right. Money printed this time is going to the people. In 2008, it went to the banks. That's where I was wrong. And by the way, guys, I was wrong in 2008 because I thought we'd have a lot of inflation. And the thing I missed was the money wasn't going to the people to spend. It was going to the banks to save them and to put in their bank accounts to make their capital ratios adequate. That's the big difference.
Yeah, Ron has a great point here, Paul. We've done a couple shows on this, giving access to general public where they can go on Fidelity, they can buy portions of shares. Paul, you showed that stat a few months ago about the number of young people, quote unquote.
I think, go ahead.
No, keep going, Paul. Take it away, baby.
I think Ron is spot on. That's what I say about the pendulum. That pendulum is swinging so far on this side. The crash, I think, is going to be way, way, way worse than we expect. Because, I hear people, when people say, like, what do you think the market's worth? I go, 15 to 1800. What does that mean? Does that mean the market goes to 1500, 1800? I don't think so. So now keep in mind, 4 or 5 years ago when I said the market was overpriced, I thought it was worth 11 or 1200. So as time has gotten on, the economy has gotten bigger and better, the stock market should be worth more money. So I've adjusted my valuation. But when we're this far away, the pendulum is so far to this side, that momentum is going to swing the other side. When all of a sudden the massive selling happens and people hate stocks, they will really hate stocks for the same reason that they really love stocks today. It swings on both sides. The euphoria on the extreme on this side will lead to the anti-euphoria / depression on this side, when people are literally going to say stocks are terrible. That's where we want to be, guys. And when stocks are terrible, when the public perceives stocks to be terrible, you guys have all learned. You guys will be watching these videos and realizing that stocks are awesome for that reason.
Harry has a great question. I think Harry's a patron, Paul. He says, if someone you knew failed to diversify and put 70% of the portfolio into a stock is now down 25, what would you advise them to hold out and sell or take the loss? This is a great question, Paul. We hear Paul, I'm sure you get the messages too from our patrons, but I talk to them and they say, I got into investing like a lot of people did this past year. I started listening to the hype channels, lost my rear end on some of the Nikolas, the Neos, and now I'm down. Paul, you had some stories about this. So what can you tell folks like this? Where give us your stance on this again, just for the new folks who are watching.
Listen, I believe in having a system. And if your system is putting all your money in one stock and that stock is fundamentals based and the stock is down a lot, if it's based on fundamentals and you believe the stock is right, buy more. But I don't believe anybody should, I own 10, 11 stocks or whatever the number is. I don't believe anybody should have 5 or 6 stocks. There's a lot of great value investors out there who put all of their assets in 5 or 6 stocks. They know them inside and out. I think if you buy 20 to 30 stocks that have fundamentals that you believe in, that's the way to do it. If you're buying a hype stock that became 70% of your portfolio, I think it's just smart to sell off. If you don't believe in the stock anymore because of whatever reason you have, then take the loss. Everybody hates taking a loss, but taking a loss is sometimes best because it allows you to move past it and go into the system that you actually believe in and get your money from there. Remember, it's all about where can I put my money best today, not where has my money been before. What's the best use of my money today? And trust me, guys, I have the same issue. We had a big property that Tim here used to manage for us in Shaker. My first 2 or 3 acquisitions, I overpaid for like crazy. It was hard for me to get around the fact of, okay, Paul, you overpaid. That money's gone. Now, every dollar you put in is going to raise the value of the property. You have to focus on every extra dollar invested, not on the past money you invested poorly. That's the hard part. I fall for it too. It's not just something that I'm immune to. We all have these issues where we worry about past money we've invested. You hate taking a loss. It's part of the game sometimes, is realizing I was wrong, move on, sell it, move on. I do that a lot.
Yeah, Paul, that's what Harry's saying he did. He said that he sold off, bought into the hype, and bought some Palantir. Harry, if you're in the Discord, hit me up. I'd love to hear more about your story, man, because we get this a lot, and it's sad. I got some pretty sound advice when I transitioned from like my first years of investing. I was around a lot of people who could have been my parents, and so they were a little more conservative, and they were showing me how to invest in my early years. But people today, I mean, these hype channels, Paul, they're just just get your oven mitts and buy, and it's crazy. So Harry, reach out to me if you can.
Guys, I have the scariest story ever. A friend of my dad's is a doctor. He was a doctor back in the 2000 crash. I remember meeting him right before the crash, and he had $5 million. He invested like a few $100,000, and it grew to $5 million in these tech stocks. After the crash, I asked him how it went. He goes, and he was very open. He's like, "Oh, Gar." I go, "What would it go to?" He's like, "Oh, that $5 million is less than $50,000 today." He lost over 99% of his money from the peak. Even from his initial investment, he'd lost 75, 80%. It's just these things happen. When you have no reason to buy, then you have no reason to sell. As I keep preaching, if you don't know how you're going to make money, you're not going to understand how you're going to lose money. It's not just easy to buy. By the way, look at Tesla. Tesla of all things.
Paul, you read my mind. Paul, before you get there, you read my mind. You see that Tesla reported a great first quarter on Friday, and of course, people are like, so glad I bought it on I'm sorry. Obviously earnings were up, and on Monday the stock price hit. Went higher, and people were saying, thank God I bought on Friday. And I'm just thinking in my mind, like, yeah, but if they if they underperformed in Q1 and you bought on Friday, you'd be losing money. I guess that is the market. But the point is, like, gosh, I don't know if people are even aware of the system that obviously you're trying to instill, the 8 pillars. I mean, that's why you've taught me to completely stay away from that. So what were you going to say about it?
I mean, by the way, look at what Jonathan's saying. It's the same thing we say about Tesla. I believe in Palantir long-term, but won't buy until it's cheaper or earnings catch up to market cap. That's exactly the way I want you to look at it. You can believe in Tesla long-term, but when you buy based on hype, I want to create a video, Seth, where we actually show the life of a company, assuming it's a hype stock. And once it gets to maturity, how the valuations just all of a sudden don't catch up. Because eventually, if you're overpaying for the future, then what you're saying is, I'm overpaying for the future. That means when the future hits, it shouldn't go higher because you've already paid for that future.
Yeah,
and
that's something you got to get people. I mean, guys, if you're watching, you just got to keep hearing it and hearing it. Paul, I did not believe you for a long time. I told you that Bitcoin was incredible, and you said from the first sentence that you're not into it. I mean, I'm not going to switch to cryptos, but my point is, like, this might take some time, guys. You do not learn any amazing task, whether it's a hobby or something, just over the course of a couple YouTube lives. Paul, you talk about that brainwashing. My children have it already. I mean, Gio just chuckles at high PE stocks, and so, but that idea of like not buying into that hype, it's difficult with so many other channels out there. we're kind of like flying under the radar. You know, Paul, it's hard sometimes to find us. Go ahead, Paul.
Nicholas Studer put his question up. Great question to ask. He asked a phenomenal question. Is it possible the value will catch up with the price? Absolutely, Nicholas. And this is a mistake I made in 2015 and 16 when I started selling, or whatever it was. The markets were overpriced by what I deemed to be 30, 40%. I didn't realize that the stocks go that much higher and values could catch up, because it's easier for prices to fall than go up. So I was banking on, we're already at a level that's only been seen above that one time in history. That was 2000. I didn't think it would get worse. But if stocks are overpriced by 5, 10, 15, 20, 25%, you can still find value somewhere. And it's possible for prices, but I ask you, if I really believe, if I'm right, and I say stocks are worth S&P is worth 1,500 to 1,800, is it more likely that the GDP over doubles and stocks stay flat? Or is it more likely that stocks plummet as GDP keeps going up? It's easier to fall than to catch up, but it definitely is possible that stocks go up and values catch up to the stock price on an individual basis. It's much harder in the markets, but yes, that is very possible. And that's just a risk you take in value investing. One of the risks you take in value investing is you don't buy something and the value, look at Amazon. I started shorting Amazon at 280 to 300, and now I think it's worth 800 to 1,000, and it's at 33,000 some dollars. I don't know what it is, but yes, that is very possible. It's a phenomenal question. I love it because it's very, very important to understand that distinction. And this is the hardest part about being a value investor. It's saying, I was wrong, move on. It's okay, because guess what? Every time you're wrong, you probably were right 10 times when it comes to an overvalued situation. That's the good part. Yeah, I love selling puts.
There's a question about puts, Paul. We need to get. I mean, of all the things we need to do this year, we need to expand your teachings on options, covered calls, and puts. People are dying for that, of course. I love it. There's a great question up here by Artur. He asks, some people just go by basic philosophy. People love seeing more money comparing to losing it. It makes them happier. Gains are overrepresented. Well, that's definitely the case, right? No one is talking about their big losses. In our Discord channel, we have a chat about big wins and losses, and it's kind of funny to talk about that. But I think that's part of it, Paul, is I asked you on the show, all these hype channels who were saying Nikola, Neo are just the best things ever. I don't know. Actually, I do know. When the stocks fell in price, they were saying now it's a great time to buy the dip. You know, it's just always a buy. So other people were saying, Paul, the one thing we need to learn from you, of course, is that patience. You know, you've told me, I think, for young investors, the idea of actually looking at a company as opposed to just looking at its ticker is just one of the most simple and monumental things you've told me. And so, yeah, it's just great.
Well, let me explain. Let me give an analogy. Buying the dip. Let's say your house is worth $300,000. You decide to put it in the market for $5 million. Nobody buys it. Okay, you lower the price to $4 million. Buy the dip. What's the difference? You took an overpriced asset, you lower the price, it's still overpriced. When you say buy the dip just as the stock price is down, you don't understand fundamentals. Because when you say buy the dip, there's a fundamental component to that. Oh, the stock is worth way more, you're buying a lower price. But that's the thing that's always funny. Now, if you're buying it based on stock charts or momentum, that's totally different. You wouldn't say buy the dip. You would stick to your actual belief and your system and implement your process. But whenever somebody says buy the dip, they are inherently saying that that stock is worth more than it's selling for right now. But like everything else in the world, if your house is worth $300,000 and you list it for $5 million, if only it was that easy to just lower the price to $4 million and say, oh, buy the dip, and somebody comes in and buys it. That's ridiculous. So is buying the dip on Neo. So is buying the dip on Tesla. There's still, Gary, my good friend Gary, the value investor at youtube.com/Gary Mashuris, he thinks 800 on Tesla is equally as ridiculous as 100 on Tesla. He goes, Paul, at 100 versus 800, what's the difference? They're both just stupid. I don't care. I don't look at the difference to be any different. They're just both stupid prices. Some people say one's 8 times higher than the other one. He thinks they're equally as stupid, which is a hard concept to understand even for me. But buying the dip is just, it just doesn't make any sense. It's just,
well, Paul, again, make sure you clarify the difference between obviously value investing and day trading. There are people say that there can be money that can be made. We can buy dips and set a stop loss. I mean, there is money that can be made, and Trader Mo is good at that. But I think what you've taught me and what we're trying to teach our viewers is you have to know the differences, which I did not, Paul, right? And so that's a very clear line in the sand of the two different styles of making money.
Correct. And, Patricio right now is saying that, Paul, your methods don't work on disrupting companies. Patricio, I have a little comment to make. Every company claims to be disruptive right now. Every single company out there says, we're changing the industry. What's the line I always see? It's like disrupting. Everybody claims that. Just like in the internet age, people would try to sell widgets on the internet, and they said, we're .com. Okay, is .com, is it a disruptive company just one that is actually changing industries? Just because they do something that's high growth and involves the internet and involves technology, it doesn't make it disruptive. You know what disruptive is? Cars, airplanes, computers, internet. That's disruptive. Is Tesla disruptive? They did a great job of making electric vehicles way more prevalent, but I don't know what makes them disruptive because their margins are the same. In fact, their margins are only better because of government money. I don't know. I don't know what makes them disruptive besides when things go up a lot, you have to justify it somehow, and calling them disruptive is the best way to justify it because there's no objective way to say this is disruptive, this is not. It's just people trying to justify their investment.
Paul, this is a great simplistic question by the Wakey. Look at this one. Should I get out of NIO down $140, 15% of my portfolio? Paul, I know where you're going to go with this one.
Was it NIO or Nikola? I think it was NIO who admitted that their truck display was rolling downhill, and that's the only reason it worked.
I didn't hear that news article, but I mean, NIO has been a high flyer. Some of the people that we're not huge fans of keep pushing this stock, Paul, and reaching high of $65 in January. They're saying this was Nikola that said that. Yeah, so I mean,
yeah, it's correct, Nikola.
So just in general, Paul, not so much that specific person, and I'm thankful that they went out of their way to say, to be honest, is what they have. But just in general, Paul, I mean, I'm certain you would not want that much of someone's position being in a hype stock like that. Am I correct?
Yeah, I mean, and Aaron's saying right here, if you don't think Tesla's disruptive, that's a pretty crazy view. Okay, tell me how it's crazy. What's disruptive about them? I mean, yes, they took electric vehicles faster. But if it's disruptive, why is everybody doing it now? I mean, you might sit there and say, well, it's because of them. Maybe, but they're not disruptive in the way of they're actually changing the way in which cars are sold. All they did was make a version that was on its way in. They were faster to the market. Great. They're still doing a hard time. I mean, I'm not trying to play. My whole point is it's so subjective. What I don't think is subjective is cash flow. Cash flow in, cash flow out. Now, the subjective part is what multiple you pay for that. In the day, I don't know. NIO, it's a Chinese company. I'm always apprehensive about Chinese companies and the data. It's remember when Uber, everybody remember one thing. When Uber was becoming really popular, every startup was the Uber of blah, blah, blah. The Uber of, by the way, Uber, they're disruptive. Uber was disruptive. You know why? They were the first ones to go sit there and say, here's an entire industry of taxis, and we're changing it completely. That was disruptive to me. Because they acted, guess what? I wouldn't buy Uber stock. But Uber was disruptive. Tesla just said, hey, electric vehicles are being developed by other companies. Let's go develop it ourselves very, very. Okay, great. They did a great job with that. And they make a great car, some would say. But Uber to me was disruptive because they literally came in and changed an entire industry on their own. Boom, immediately. That was hard. Now, exactly, Billy Ortiz, they killed the cab industry. I remember I was in a taxi. I've only taken one taxi in the last 5 years. It's always been Uber. The one taxi I took was in San Diego, and the taxi cab's way of getting me to not drive Uber anymore was basically saying to me, well, if you don't want to be raped and murdered, drive a taxi. It was like, okay. I mean, that was his like, yeah, you shouldn't do that. Great, sounds good. But Uber was disruptive to me, not Tesla. Tesla makes a great product. They weren't disruptive, in my opinion.
Yeah, I mean, Paul, let's be very clear. We can love a company and really dislike the stock evaluation. of what people think of the company. And so there also goes the other way is I am heavily invested in companies, folks, that I have no damn clue what the hell they even do. If the little book, the market, if their financials are on point with what I want to do in terms of a value investing standpoint, Paul, in my portfolio, I have tons of companies. I have no damn clue who the hell they are. In fact, some of these big gainers like Discovery Channel, MSGN, I even owned and didn't even know it because, folks, when you pick those good companies, as Paul describes, you can sort of set it and forget it for a year, right, Paul? I mean, you can lay down at night not knowing if the next video that comes out about one of these hype stocks, if this stock's going to go up or down, or who's tweeting about it. I mean, yeah, it's just bonkers out there. I'm so glad you taught me that, Paul, about not trying to keep up with the Joneses of all this hype and just know that I have good companies. And so, yeah, other people saying, Paul, you have no damn clue what you're talking about EVs. Yep. That. By
the way, about EVs, remember EVs. Do me a favor, guys. Tell me a manufacturer that doesn't do electric vehicles. I'll wait.
Yeah, Paul. I mean, I don't know how much of that market share Tesla's going to have when now every company. I mean, Jesus.
By the way, Tesla could very well be the #1 manufacturer of EVs in the world someday. That doesn't mean, one, that they're disruptive, and two, it doesn't mean that they should be worth whatever number, $800 billion or 600, whatever they're worth. Uber, as an example, is completely disruptive. And guess what? What's their stock doing? I don't even know. And I guarantee it's overpriced beyond belief. What's Uber at right now? Are they public? They are public, aren't they? Yeah. Okay. So their stock right now is at $57, and it went public at 41 or so. Sick. Okay, great. Let's go look at their income statement now.
Oh, boy.
4 quarters. Oh, wow. Oh, of course, that makes sense. They're man, look at these losses. They've lost $15 billion in the last 2 years. Let's see how their cash flow looks. No free cash flow. Sick. That's awesome. Well, have fun. I mean, listen, I don't know what to say besides these guys are disruptive, and I don't see how I can't justify the stock price. And again, I could be wrong, and it could go forever because they grow and grow and grow as the market keeps going up and up and up, and they can get away with things as they. I just saw a company the other day announce they're going public, even though their numbers are worse, because they realize how good the market is right now, and this is the time to get those people public. They realize that the market is so hyped that their numbers are worse, but they'll get more money by going public now than by waiting until the numbers get better. That should be a big indicator of how the market is right now.
Paul, will you click on the 8 pillars right there on Uber? People want to see it.
Even understand disruptive. Obviously, I don't. Look at that. Well, we don't even have data. So, guys, one of the things I'm changing is if a company doesn't have 5 years of data, I'm not doing the 8 pillars on them. I want you guys to do them manually. So I'm only going to do it because one of the big things is I probably won't even look at a company that has less than 5 years of data because that's just not my style.
Explain that again, Paul, because people still need to grasp when they say you're missing out, and people are asking, like, we should do a whole show on IPOs. They're asking about individual IPOs, Roblox, other things, Coinbase IPO. Those IPOs are just all over the place, and so you just tell us again what you like to do with these new companies and how you like to look at them.
I want to find companies that have substance behind them. Companies that go public because they're like, hey, we're doing very well. We're generating. Companies that have been around for a long time that go public. That's what I want to look at. And then look at their fundamentals. But remember, when a company goes public, what happens there is the investment bank that was hired, they aren't bankers. They're salespeople. They go on what's called a road tour. And they go out there and generate hype for their company that they're representing. And their goal is to sell as many shares as possible because they get incentivized to sell more and more shares. So just remember that they're not going to sit there and tell you the reality of the company. They're going to tell you all the good stuff. It's your job to learn. There's a reason. Go look at the history of IPOs. I don't know the exact numbers. The history of IPOs is not good, guys. Companies go public. That doesn't bode well for them. So it's your call what you want to do.
People are asking, of course, David's asking for a shorts check, Paul, and they want to see this beautiful beach behind you at some point. It's really more of a cliffs. We'll have to show patrons.
Oh, my shorts are awesome.
What do you go? Oh, look at the tilt is down.
Awesome.
Yeah, show them the house a bit. Okay, now you get ready for. Oh, look at those, Paul. Now we're getting ready for Taco Tuesday in the background. That is incredible. If you want to go to luxuryzlo.com, luxuryzlo.com, you can see beautiful pictures that I, of course, have done of the Mexican houses, which I love. I flew the drone all over the place and love it. And Mo is down there. Guys, I will be going live with Mo tomorrow at 1 p.m., and I will do a full trading and momentum, a Q&A with Mo and I tomorrow live at 1 p.m.
Hey, Seth.
Go on.
Did Darnell reach out to you? He got a drone, and he's
He's been flying it around for sure. Yep, for sure. Guys,
is he doing well?
Yeah, he's doing okay. Paul is in Manzanillo, Mexico, on the west coast. It's about 4 hours south of Puerto Vallarta, and Paul, everyone wants you to do this Baidu. We've done this Chinese company before, but I do have Lily. There is some drone footage on the website.
LuxuryEI.com, I believe, is the website.
Oh, I just gave the other website. Oh, there you go, Paul. They changed the website on me. Oh, show it to him, Paul. There you go. Actually, now that people are asking.
I just did. We should do it
one more time. Show them the website. There it is. 2 chains. Oh, look at that. Yeah, I took that photo.
So I'm in here right now. This is where I'm at, below these guys right here. That's our view from this house.
Beautiful.
That's our Dominican house that we don't own but sublease for them. It's a beautiful house, cleaning staff, private pools, personal chef, all the things. This is the other house. The house is now painted white, so we're getting new photos. Bali, we're getting a house in Bali. So this is our goal is to get 10 or 12 houses here in the next 5 to 10 years and have a really great luxury experience where people can go rent houses all around the world.
Yeah, it's incredible, Paul. All right. Well, Paul, just like that, we chit-chatted for 45 minutes. Would you like to talk about some requested stocks from our dear patrons?
Yeah. What was the one that I tagged you in?
I got them here. Before I do, folks, make sure you guys are fondle that thumbs up. You know, I love that new verb I've been using, Paul. Fondle the thumbs up. Make sure we get our thumbs up. We appreciate your support. I would say next week will be huge, Paul. Next week will be huge. Paul will be back from Mexico. Mo, myself, and Paul will be back in the studio where you love us and know us to analyze the stocks. Paul, our fireside chat for patrons only is next Friday. But, Paul, the biggest day of all, April 15th, is next Thursday. We will release.
Oh.
Go on, Paul.
And I'm going to repeat over and over again. The price is going to skyrocket on the $18 level. It is going to go to well over $21 or $22. Sorry, not well over $20, at least $21 or $22. Get in now at 18. You'll get that forever, apart from yearly increases. And the cost of our software will eventually be $49. So you have to decide for yourself what's more important, getting the software today at 18 or waiting until you realize that you need it and getting it at a much higher price. That is your decision completely. And when you do get the software, set up for our Patreon, you're automatically entered every single month into our Tesla giveaway. At 50,000 subscribers, we're giving away a Tesla. And then at 100,000 subscribers, we're giving away a Tesla Model 3 car. So you decide how important your financial future is to you. If you don't believe in your financial future, then I don't know what to tell you. But Seth, I'm going to share my screen here on the, I gotta do the comparison chart.
Go ahead, Paul.
Well, I got to change. How do I change my screen?
Let's get to it a little later then. We'll get to the comparison in a bit. Yes, Ryan.
Okay, what was the first stock? What was the stock, Paul, that one of our
here we go, guys. Gave us? The first stock we're going to look at, Paul, is GTN. The ticker symbol is GTN. This is Gray Television. It's an American publicly traded television broadcast company in Atlanta, founded in 1946, and they do Gray Communication Systems. They own 145 TV stations across the U.S. Big company, Paul, over 100 years old. Can you share your screen again one more time so we can get the Everything Money website up and cooking, baby?
Yes, we can. Share screen, application window.
I love you.
Here we go. You ready?
There we go. Give me a second, Paul. Let me get you in here real quick. Give me a second here. Here you are. Go ahead, my friend. Let's start with what is the market cap for GTN?
1.8 billion, and they made $400 million last year. So their PE is 4.36. That's a check mark.
Beautiful.
With a profit margin of 17%.
Beautiful.
Wow. So 2 check marks so far, Seth. And look at this. Last year, their free cash flow was 542, and their 5-year average free cash flow was 276. So just right there based on that. Yeah, either way. Now, one thing I don't like about the company is their return on invested capital and their return on assets are very low. So they're not doing a good job of reinvesting their capital to make more wealth for the company. That's not necessarily good or bad. We prefer a higher number, but if it's low like this, you need to pay a much lower price to the company because as their cash flow, because they're paying a 0% dividend. So they're taking their cash and doing something else with it. So far, 2 checks, but a low return on assets and low return on invested capital. Okay, income statement.
Yep, this is pillar number 3 is revenue growth over the past 5 years, Paul.
793 to 2.38 billion. That's check marks.
Wow.
That tells me they've made a lot of acquisitions in the last 5 years because I don't think it's very easy to almost quadruple your revenue over a 5-year period in TV stations. And their net income has gone from 62 million to 410. Check mark there.
4 straight check marks, Paul. I'm looking up the acquisitions now. Pillar number 5.
We'll see them on the cash flow statement as well. But shares outstanding, here it is, 71.8 to 93 million. So they've increased their shares outstanding by almost 30%. That's a lot, maybe even more than that. Cash on hand, 918 million. Total current assets, current liabilities, 344. Check mark there. Plenty of cash on hand to pay their current bills. Cash flow, as we said before, their average, look at these. So look at this. Look at their acquisitions in the last 5 years. 440 million, 400 million, 2.6 billion. So they've made a lot of acquisitions, as I said before. They've made a lot of acquisitions.
Just last month, they acquired Quincy Media for $925 million in cash, and that's going to give them an extra 110 TV stations. That's a big buy. Paul, tell me this before we keep going on this. Other people are saying that I've been finding this too on multiple different websites. The dividend from Google to Yahoo to a lot of different websites, including the 8-pillar website, Everything Money website, the dividend is always different in some places. Like, what's going on with that? Do you know?
So let's look. Sometimes people report dividends based on trailing versus last year versus upcoming. So what's the GTN? Was this GTN?
Yeah, GTN.
Yep, there's something wrong with our data then. Okay, there we go. There's a bug there. Well, wait a second. Did they not pay? They did not pay. Let me look at their financial statements. Cash flow statement. Were there dividends? Yeah, there are dividends paid right here. Oh, I'm sorry, guys. So that's a bug. That's a mistake right there. So let me. Did you write that down? Dividend. Yeah. So we have a dividend error on our software. For GTN, but it's probably for other ones.
It is, Paul. Yeah, there's a couple other ones I wanted to ask about. So
okay,
folks,
so that's
I
good.
would say.
So, go ahead.
Yeah, I would say, folks, just like your phone or your computer, when it says it's going to install, an update, that's what our website is working through. There will be more problems come April 15th, and as more people use it, there will be problems as every software piece, and we'll get them updated. Paul, you have a team of developers working on our site, and so, Paul, people are asking, can I count on the Everything Money website for my financial data? And the answer is, of course, yes.
Yes, and guess what, guys? There's always going to be mistakes. I look at Y charts. I pay hundreds of dollars a month for Y charts, and guess what? I have found tons of mistakes on Y charts I've emailed them about, and they're like, "Oh, thank you very much. We'll get this to our development team. They'll change it." I have found mistakes on every financial website I've ever been on. It's just a reality of life. It's always a good reason to always double check and report things to us. But the one other way to look at it is go to your dividends paid in the cash flow statement. But look at this, guys. The dividends paid is not consistent. They took many, many years off of paying dividends. Last year, they paid $52 million of their $542 million in free cash flow. So that's the good news. They're only paying out less than 10% of their free cash flow is going to dividends. 1.76 billion market cap, 542 million last year. That's 3.5 to 1 or so. Wow. So the question you have to ask yourself is, why is it so cheap?
Paul, someone had a question. Ryan, make sure we didn't miss anything. Ryan says, did I just see $5 billion in total liabilities? Did we get that correct, Paul? Pillar number 6
yes,
is
$5 billion in total liabilities. $5 billion in total liabilities, not current liabilities. Why? Okay. What's the other one saying?
That's it, Paul. I just want to make sure if Ryan talks, I listen. He's my homie. So, okay. So pillar number 7, reevaluate one more time, Paul. Free cash flow. Why we're looking at it and why it's so important, and how it's going for GTN, Gray Television.
Okay, so the free cash flow the last 5 years was 276. But guys, as you saw, they made a lot of acquisitions. So this might, right now for the last year, they're at 3.5 to 1 on their free cash flow multiple. Over the last 5 years, they're at like 7 to 1. I mean, guys, this sounds like a really, really great idea to look at this company in further detail. But one of the things you want to realize is where are TV stations going as we spend more and more money on streaming? So the question becomes, what's their business model going forward? Why are they making so many acquisitions on TV stations? That's confusing to me because we're going to more and more streaming. We have to figure out how they're going to generate more and more cash flow as time goes on. This could be a prime example of a situation where people over dramatizing what's going to happen with TV stations, and that's why this might be a good deal. But you need to understand that going forward. But I definitely think this company is one with 7 out of 8 pillars to go forward and do more research on. 1,000%. I like this one.
This was
great.
To
go do more research on.
Yeah, this is great television. Trader Mo is in the chats. Maybe Mo can look this up and address it in the morning in the Bidnast Nation there, the middle tier of our Patreon. If you guys are in love with this, yeah. So Paul, it's not often you say you love one. Great television.
No, I'm saying I love the idea of going further into this one to understand. Is this an example of a situation where people are discounting a free cash flow so much that if it has 10 years of life left, it's still a positive free cash flow for 10 years. They do have a lot of debt. The $4.4 billion in long-term debt, you have to figure out what's behind that. Is there real estate behind it they can sell off and pay that off some way with? You have to understand those ideas because that's what makes for good value investing. Because remember, guys, most companies that are selling cheap for a reason. Most of them are bad stocks, but every so often you're going to find a good value play. That is your job.
Paul, I love this question. Edgar's asking, this is incredible, and I never thought of this. Why isn't the total debt added to the market cap on top the same way that extra current assets get subtracted from the market cap? We've never addressed that. What do you think of that question?
So we're here looking at enterprise value. And that's a very common theme amongst value investors and one that we will institute as time goes on. The reason I don't look at it that way is when you're buying a stock, you're buying its equity portion. You're buying an interest in its equity portion. Now you should look at the total long-term debt as, is it too levered where my equity can be wiped out very quickly? Perhaps. But when you're looking at a company and they have more cash on hand than paying off all of its debt, then its enterprise value is lower than its market cap. So one way to look at things is look at enterprise value, which is the equity portion plus debt minus cash, all these other metrics that are involved with that. I don't remember the exact equation. And that is a valid question, but that's enterprise value. And with market cap, we don't look at enterprise value. We're looking at the actual equity portion of the company. How much are you paying for that equity portion?
Great question, guys. Paul, that is our take on GTN. Yeah, interesting. There was a Patreon request, and they were very heavy on it, and we're getting some comments.
Well, when you say Patreon, what was the Patreon request from Jonathan earlier? Was it Jonathan earlier?
Let me look real quick, Paul, because he had another one which other people are asking, and it's Sinclair. The next company we'd like to look at is Sinclair Broadcast Group. The ticker symbol is SBGI. It's an American telecommunications conglomerate, Paul. I like that, which is controlled by the family of founder Julian Sinclair. It's been around since 1986. Okay. Do you know about this company? Go ahead.
No, but I want to answer a comment that Jonathan just said. Some people look at enterprise value over EBITDA. EBI, it's actually TDA. Now, I want to talk about this because this is actually a little bit granular, but it's important to me. I never look at EBITDA. I believe depreciation is when you make a capital investment in the company, the capital expenditure, and the government doesn't let you just write them off day one. It takes time to write them off. So what people do is they add the depreciation back in. I never, ever do. Depreciation is a real cost in most companies, non-real estate companies. It's an actual real cost. When you add depreciation back in, you are adding back in a normal depreciation expense that's actually incurred every single year by buying new equipment to maintain the business. This might be a little confusing, and I understand that completely, but Steph, if you don't mind sharing my screen, I want to show the cash flow statement.
Please do. Give me a second. There you go, Paul boy, baby cheeks.
This net capital expenditures, these amounts will be depreciated over years. They are real costs. It actually cost them $43.6 million in 2016, but it might take them 7 years to depreciate that number. They are real costs over long periods of time. I never ever look at I never take away depreciation, add depreciation back into net income when doing a valuation. It's a great point that Jonathan brought up, and I'm glad he said it, because I do not like EBITDA at all. I always laugh when people say like, oh, we buy based on a multiple of EBITDA. I'm like, oh man, that's so bad. That's why I like free cash flow, because free cash flow actually factors in the capital expenditures of a business. That's why I love free cash flow. The capital expenditures are the amount of money it takes to actually maintain the business, reinvestment back in the business to maintain that business. And when you have a manufacturing business, or when you have other things that cost big capital items, those are real costs. You have to factor those in there. EBITDA, throw it out the door.
Edgar has a great question. I mean, you guys out there with these questions, you guys are bringing the hammer. It's incredible. What's the maximum level of accepted debt or debt ratio we would accept, considering all these companies with debt will struggle in an inflationary environment with higher rates, Paul? What an interesting question.
It's a great question, and it all depends on the sector, the business, the industry, all those things, and I can't answer it for every single company. But that's one of the things to look at. Like, look at all the companies in an industry that you're looking at and see how their debt levels. Because remember, I liked CCL for that reason. I thought they had the lowest debt levels out of all the major cruise lines, and they were the biggest one. And Giroy, EV divided by EBIT makes more sense. I agree with that one, because interest and taxes, I do understand you can like add those back in, et cetera. But even then, I just like it's just be consistent about what you're doing. But I do think depreciation is an expense you need to factor into all your analysis. Don't do EBITDA. Do not do EBITDA. Why have EBITDA when you're a growing company? I don't know if I understand that question totally. Why have EBITDA? Oh, by the way, Tolly is one of our newest members of our Paul Super Shorts.
Oh, nice. Welcome, Toll. Nice.
Yeah, he just joined yesterday, our Super Shorts.
Great. Okay, so that is, in general, all of that data was for GTN, great television. So thanks, Paul.
Okay, so I'm going to look up Sinclair now, right?
Yep, the ticker symbol is SBGI. SBGI. This is Sinclair Broadcasting Group.
Okay, do you have it on the screen?
Yep, go ahead, baby.
Okay, market cap, 2.2 billion. Revenue, 5.94 billion. Net income, a loss of $2.4 billion. Now, here's the interesting part, guys. Last year, they lost $2.4 billion in net income. Look at this free cash flow stuff. What does that say?
Wow, $1 billion. Look at that.
Yeah, so they had a $2.4 billion loss with $1 billion in free cash flow. That tells me, as part of the story, there was a write-off somewhere. It wasn't a cash expense. So they made some acquisition somewhere, probably, and they wrote it off last year. Probably a good year to write it off. Why? Because, the economy is terrible. We'll get away with it this year. Smart move. A lot of companies will do that. Oh, you know what? The economy stinks. Hey, we overpaid for this. Let's write it off now. People will accept it. Now, so negative PE, negative profit margin, X and X. I'm showing a dividend of 2.7%. I don't know if that's true or not now that we base everything on let's look at their income statement.
Paul, I would say you're spot on there with Sinclair. They wrote off $4.2 billion on regional sports channels amid some political advertising that wasn't going in their way. So, yep, that was last November, Paul. You're spot on.
Wow. What do you mean by political? What the heck happened there? What does that mean?
Let me see, Paul. It's just a headline. I got it. They basically said that the conservative-leaning organization said it saw stronger than expected political advertising revenue amid election season. So it's just they're saying.
Why would that lead to a write-off?
I'm trying to see here. Sorry about that. Maybe I shouldn't have brought this up.
Oh, Jonathan's saying they bought sports networks and wrote a bunch off when all the leagues closed.
Okay. Yeah. Okay, Paul. You want to keep going?
Great. Okay, so revenue, 2.62 to 5.94. Something tells me we're going to see a lot of acquisitions along the way. Net income, 245 to a loss of 2.4 billion with their 4.16 billion in write-off. So this is all the more reason why free cash flow is more important.
Oh, Paul,
Shares
I'm
outstanding.
I'm reading it wrong. Jonathan said that Sinclair had a big free cash flow boost, obviously selling those political ads in the fourth quarter of last year. That makes sense. My apologies.
Okay.
You know, I'm just a chimp trying to run the show, Paul, a hairy animal. Just, he's a big dumb animal, folks. Keep going, Paul.
Why is Spicer saying sports viewership is in the tank right now? We'll continue to do so. Anyhow, shares outstanding, 90.48 million. That's 74 million. That's a check mark there. Balance sheet.
Current assets,
cash on
current
hand.
Liabilities. Pillar number 6, guys.
2.54 versus 974. Check mark there. Wow, a lot of debt here, guys. 14 billion in total debt. That's a lot. Cash flow. 5-year average, 590 million. Their market cap was how much?
2.2 billion, Paul.
So they're selling for 4 times free cash flow.
Holy cow.
Of the last 5 years.
4 times, Paul.
Yeah, 4 times. Well, this is interesting. Okay. 3.73. Sorry. Interesting. All right. Well, this is interesting. I mean, listen, this is an industry you have to go understand. Like, what's going on with their TV stations and their broadcasting? How are they going to account for? How are they going to make up for being in the world of streaming? That's just the question you have to ask.
Yeah, Paul, I cut the cord with cable and I had YouTube TV, but of course last night I had to call in all my favorites to watch that basketball game because they don't have a streaming service. So I think as much as local TV channels are going in the tank, or at least perceived to be, there's always going to be local events that people are going to want news. And half the country's really old. They're going to sit down and watch Powerball, Paul. You know what I mean? I know you used to watch Cast Explosion when you were a kid back in the day, right? On Saturday nights.
Of course. But the thing is, Seth, we talk about that. Even though there's still half the population's old, and I get that, newspapers still went away. And how many people? People over the age of 50 still read newspapers, and that's gone away. Yeah. So everybody's still changing even with it, and that's just, again though, if you think this company can still generate $600 million a year in free cash flow and it'll be around for a long time, and their debt is manageable, that's a lot of debt. But that's just a lot of debt. $6 billion in revenue, and they have $14 billion in total debt, 13.1 or 13.2 in total. What's it called? In long-term debt. That's a lot, Seth. That's a lot of debt.
Final take on Sinclair, then, Paul.
I'm not really a huge fan. It's a debt number that just drives me nuts. It's a lot of debt.
You're stumped on this.
Go understand it. But then again, if I'm not a huge fan, maybe it says something about me and my views of it. And I have to go understand it better and realize that maybe there's more potential here.
All right, that's our take, folks, on Sinclair. Paul, O'Beanie's asking.
I was just going to tell you, put O'Beanie's comment up, question up.
Yeah, how hard is it to integrate an 8-pillar screener? Folks, the point of all this is you're new, is with thousands and thousands of stocks, we can't carefully go in and do all that beautiful due diligence that we want to do on every company. So Paul uses and has taught all of us this 8. Paul, I'm talking like you're some sort of preacher or something. I don't know why I keep saying it like that. It's like I was in the South for a week. That's it, Paul. Like you're preaching and teaching, but showing us the 8-pillar screener so we can look at companies from a 500-foot view and see if we want to go deeper, like Gray Television, like Sinclair. And so, Paul, you want to show them the 8-pillar portfolio page on the website?
So what that's not what he's asking.
Okay, go ahead.
What he's asking, go pull up his question again.
Sorry about that. Go ahead.
What he's saying is, how do we run a screener that'll show us what stocks are 8-pillar stocks, right?
Yeah.
Okay. Part of the big reason I'm bringing Tim on Everything Money is he built a fabulous screener for Dynasty Owner. I think the screener is going to be one of the most important parts that we build for the Everything Money website. I want you guys to be able to screen for a lot of different metrics that matter to you, and one of which will be, hey, show me all 8-pillar check marks. Go be companies that have 7 pillars, 6 pillars, so on, and find different metrics that matter. It will be a big part of the website. I think you guys realize every single question asked of me is, we're going to do this. It's just going to take some time. That's why you guys are getting lucky by entering in so early, because the more and more we do to this, the more and more valuable it becomes, and you guys are stuck on the low price. So stick with us. We're going to be doing it over and over again. I'm even going to have it where it's going to be able to create a stock analyzer for you. We're working on the stock analyzer now, and you basically say it, run it on every stock in our database, and tell me which stocks fall under these metrics that work for me. And it'll tell you these 74 stocks are selling for below what you determine to be your metrics. That's going to be amazing. So you can save a bunch of time by screening and saying, oh my God, I have 74 stocks to choose from. Let me find 15 or 20 that actually work for me. This is going to be amazing software.
I would say, guys, if you are in the Patreon, we will be submitting our new portfolios. Paul, they want to see your moves for this month. So patrons in the Discord channel, we will be showing you our updated portfolios. And Paul, I lost some covered calls that I had to rebuy back, and we will have the 8-pillar list will be updated in Discord as well. Paul, we've got some requests for Kroger and BP. I think I'd like to do dedicated shows on those so we can really dive deep on those, couple of our favorite companies. And so we'll have that in the pipeline, no pun intended, moving forward, guys, with Kroger and BP. Paul?
Archer, Nagy, yes, the Excel sheet will be available, but not the Excel sheet. It'll be a better version. That is a stock analyzer tool that I'm talking about. It will help you analyze. All you have to do is put in your assumptions, and it'll tell you, here's what you should pay for the stock. You have to put in all the assumptions. Here's what assumptions on revenue growth, profit growth, cash flow growth, all these things. They'll tell you, this is what your stock is worth for you today. Boom, done.
Yeah, Edgar, initial Patreon subscription prices do stay the same. There will be like Patreon might implement, small increases as time goes on. But no, if you paid $8, if you're part of the 8-pillar peeps back in the day, Paul, just a few months ago, that is your price point. So when people are paying $21 going on $50 a month, you will still be paying $8 for the rest of the time as long as you're in. Unless, of course, Paul, if you jump out and jump back in, you out, you gone, you dead. So yeah. Guys, what else? All right, Paul, let's open this up to some general Q&A. Any news on your end with your life? Anything we need to know besides you'll be back next week? And I miss your musk, I miss your scent, and I need you back in that studio. Tell us what's up in your life.
Everything's great. I really am focusing on Everything Money website. Laura just asked, will Paul be open to open a company that can manage other people's money? Absolutely not. I hope to never, ever, ever manage other people's money because my viewpoint of the world of stocks is very different than most. You guys are all great students here. We're all learning together, but we've also seen a market that's gone up and up and up. When we see a market go down and down and down, I want you guys to be able to stay with us and learn and go, it's okay, because it's going to be fine in the long run. And that's hard in the money management business. You have career risk. Why? I don't want to be gauged on my performance from quarter to quarter. I want to be, and you guys have seen me, when you guys give me credit for stocks after 3 months, what do I always say? Don't give me credit. Wait for 10 years. That's the credit I want. So the same thing applies there. It's just different viewpoint. Go ahead.
Other people are asking, when are we going to vlog, Paul? We definitely do need to, as we grow, folks. Jonathan's saying we have so many plans for this show, guys. This is not a show that Paul and I are sort of settled with, where it's just going to be us doing this a couple times a week. We have pages and pages of videos we need to make, specials we need to make for our patrons. We will have an in-house videographer that's going to follow us and get your thoughts on a daily basis, Paul. All this is going to happen. I mean, I guess talk about that, Paul, like what we have planned for the future. This show goes beyond just a couple of guys, 3 guys, including Mo on the mic. What are your thoughts moving forward? The year is opening up. The sun is out. Go ahead.
We haven't even started with, we haven't really done anything about real estate yet, guys. I mean, real estate's gonna be a big factor in this whole entire, we really plan on making this everything about money. Like, we're going to talk about, we plan on making this some sort of like CNBC type channel where you guys come to us and our channel for news on everything related to investing and money. When we have our website, it'll be all about, I go there instead of Market Watch. You go there we want to get contributors in there. We want to get people writing for us. This is a long-term project in which we're going to build this as a very, very powerful financial website where you can use our software to hit your goals. It's not just, and then I will teach along the way the ideas that I have learned over the years. But if they don't speak to you, they don't speak to you. That doesn't matter. That's fine. If you're going to, for example, in our super short tier, people have said to me, well, the one biggest number was Intel. Everybody's like, well, Paul, you said you'd only buy Intel at 45, but I have it worth 65 or 70. I'm like, I have it worth 65 or 72. as well. But for my margin of safety as a value investor, I'm not willing to buy it for above 45 or 50. And those are the differences that I'm trying to teach. But they don't necessarily work for everybody. They work for me. I'm okay sitting on the sidelines in cash doing nothing all day long. Most people are not. So if you need to be in the market and you think Intel's worth 65 or 70, are you going to buy it at 60? Yeah, probably. And I'm okay with that. I don't think you're going to do bad with that if you buy 25, 30, 35 stocks that all are selling for below what you think they're worth. I think over long periods of time, you will do very well. A lot of this has to do with the psychology of investing, and I'm going to teach that along the way as well. It's going to be very exciting, but the plan for this, we've only scratched the surface on this website, on this channel. I think we're going to hit 28,000 subscribers today. Have we hit 28,000 yet?
Yeah, I think we only need a few, Paul. Yeah.
We have 15 more subscribers to hit 28,000. The plan for this website and this channel is so big, so exciting. Listen, I have 10 businesses, and I focus on basically 2 of them, maybe 3, but I focus based on 2 of them, and that's Everything Money and Dynasty Owner. And that's it. And it's just like, this is a big plan for our future. We love making software, and we're going to do more and more. Laura, go to www.luxuryei.com.
Luxury EI, thanks. I gave the wrong website, the old website. My apologies.
Email me at paul@everythingmoney.com.
Yeah, TC is saying it. Well, I turn into Jim Cramer with the sound effects. You know, I love those sound effects. I'm a diehard Howard Stern fan, so I loved those little sound effects, and the show feels empty without him, Paul. I can't wait to get back in the studio. Now, Paul,
and by the way,
go ahead.
Sorry. Well, for Laura, guys, any patron gets discounts on everything we do at Crossroads. Do you want a vanity? Do you want a light fixture? Do you want anything related to your house? Do you want to rent this house in Mexico? Every patron gets 5 to 15% discounts on every Crossroads company's products. So if you plan on remodeling and you want a $2,000 vanity and you're in the if you're in the highest bracket, the highest level, you get a 15% discount. That just saves you $300. That's the point, guys. This all makes perfect sense. I want you guys part of our entire Crossroads family. And so when you buy the Patreon, you get discounts on everything we do. You want to rent the house in Mexico? Typical price is whatever, $10,000 or $12,000. You get a 10% discount. You just saved $1,000 or $1,200 just by being a patron. It makes total sense to become a patron. The price is only going up. You have to do it now because it's going to go up on April 15th. Guaranteed.
Robert is asking if they want to try out an upper tier, Paul, what do they do with their original spot? He's an 8-pillar thriller initial.
So we have changed our rule. If you are upgrading, we will guarantee your spot if you want to go back down. If you are downgrading spots, you don't get if you go, oh, I'm downgrading. Oh, shit, I want to get back. Sorry. You don't get to go back.
So, Paul, our fans are incredible because they can see how excited I am because I had something big happen to me in Tennessee, Paul. David Spicer, I hope you're on. And there's like 3 people on the live stream right now who will get this, but just gently, I'll preface this little flower card, Paul, that no one knows but just me and a couple nerds. So, yeah, I got this flower in Tennessee, and if you want to message me on the Discord, I'll tell you the whole story about behind.
Where is it? I don't see it.
You don't see this? Look at this.
Oh, yeah, that one. I was wondering when you called me and said you got it. I was like, you bought it in Tennessee?
Yeah, so there it is. The only I care about it. So, all right, guys.
And Seth is holding a $17,000 card in his hand and flipping it around like that.
That's true. So I did not buy this for $17K, but I did trade like $30K of cards for it. So that's that. So yeah. So yes, Roy. Yeah, that's right. WTF. So there it is. All right, guys. Paul, listen, of all the things that we have, Miguel, it's unlimited. Of all the things we're going to do, Paul, I think we need to branch out. What
do you mean?
Like people are asking for a Seth cooking show, a Paul house tour, a Seth magic collection tour. Some people want to get females involved. They want to get a whole female group together. It's just yeah.
By the way, I'd really like a female group because we don't have a lot of female viewers, and I think women do a better job of managing money than men do. It's been proven over time the returns are better. And I think more women should be more active with their investments. I think in the households, men tend to be the ones involved. They get all the cocky about like, oh, I know what I'm doing. Shut up. It's like, no, I think the other thing is you shouldn't rely on one person. You shouldn't rely on somebody to handle your money for you, whether it's your husband or your money manager or whatever like that. Let's get a female group now. I also don't believe in, we're only going to invest in female-backed companies. That's stupid. I get it from the standpoint, but you should invest in companies that make the most sense, no matter who's running it. Doesn't mean you shouldn't promote better gender engagement, things like that, and more equality. But it's not a pick the best companies to buy. Don't hyper focus into certain areas based on who's running the company. I don't believe in that.
Yeah, Paul. People also want reaction videos. They want you to watch Stock Mo.
There's one coming soon, guys. Seth and I are going to be doing a reaction video very, very soon. So
yeah, we're gonna get yeah, Paul, we're gonna get some enemies here moving forward about what we're planning. Yeah, guys, there's just so many ideas we have. We really just got to get them on film and get them out there, and we will do that. So yeah, Paul, great show today. I'm happy we were successful with the sound and the cameras, which is always tough when we're going mobile. Yeah, guys, keep the I am monitoring the YouTube suggestion page. Of course, our dear lover Uncle Don has stepped away from the show, so we're in a bit of a transition. So if you can bear with us, we still love you, and hopefully, not hopefully, the website will come out next Thursday. The patrons will get access to it. The day of reckoning is coming, Paul, and yeah. And of course, Paul, people are saying something for kids. I'd love to get Gio on the show, Paul, a little bit, maybe just talking to kids about, Paul, I'll tell you what, your thought process of what you're teaching, the patience, the discipline, looking at companies, literally my 10-year-old can figure it out. And Paul, he just takes every dollar he can. And he looks at a $20 bill and says, this is almost a CCL. He's so addicted to this. He's really found his passion. And I look up to him as a 10-year-old about getting that passion about saving. The amount of money he's going to have. Paul, his portfolio hit $5,500 for a 10-year-old. He's very, very proud and happy. So, yeah, and not resting.
By the way, Seth, I want to talk about the excitement. The last time I was at this countertop doing a video with you, a live stream, my dad came and said hi. We had 8,400 subscribers. We're now going to hit 28,000 here. And that was only December 27th or so, maybe. I don't know what it was. It was December 29th, whatever it was not very long ago. So this is awesome. This is great. This is going very well. And I appreciate everything. It's only, guys, when I tell you it's only going to get better, it is only going to get better because I have this guy helping me out in making the software and the channel, and he's phenomenal at it. We have a great host in Seth, and we have somewhat of a brain over here. So let's keep doing it. It's a lot of fun. And yeah, I think it's lunchtime here. So don't forget to
Taco Tuesday. That's my favorite meal in Mexico is Taco Tuesday. So yeah, so just yep, guys, if you do other people are asking, Paul, if you do upgrade and want to try an upper tier like the trading channel, the trading tier of the Patreon, you can upgrade and save your old spot. You just can't downgrade. So guys, we love you. You know I love you out there, and I appreciate your support. Message me on Discord if you want to talk about the flower card. Woo-wee! And of course, we will see you tomorrow, 1 p.m. Eastern, with me and Mo for trading. And Paul and I will be back together again this coming Thursday at 1 p.m. And Paul, that's it. You know, you're the man. I appreciate everything you're doing down there, and stoked to be on this ride with you. We appreciate the viewers. We appreciate you Patreons, and we'll see you soon. Paul, you know I love you, baby. See you guys.